Hello and welcome to Future Building. I'm Matthew Aitchison and I'm Professor at Monash University and CEO of Building 4.0 CRC, a cooperative R&D hub for the building industry. In this podcast, we take a broad look at buildings and building in contemporary society and what's coming down the pipeline in the future. In upcoming episodes, we'll talk with invited guests and experts in the field where we'll cover news and trends along with research and developments in the industry. In this episode, I speak with Dr. Cameron Murray about the burning global topic of housing affordability. Cameron is a research fellow with the Henry Halloran Trust, located at the University of Sydney's School of Architecture, Design and Planning. Trained as an economist, Cameron comes at the problem of housing supply and affordability a little differently to the mainstream of debate, providing some fresh analysis and ideas that just might upset the status quo. Cameron's take on the issue starts with what he terms the 5 myths of housing affordability, and then we get into a discussion around some solutions and what one could do in this space. Here, Cameron has done quite a bit of thinking, which is brought together under the concept of housemate, which you'll find in the show notes. Keep an eye out for the cameo of Charles Darwin and his thoughts on housing affordability. Yes, I am serious. And I would close in saying that if there was ever a need for some fresh and balanced thinking, there's no topic more deserving of that than housing affordability. I hope you enjoy our interview. I spoke with Cameron in November 2022 from his home in Brisbane. Cameron, welcome to the show.
Thanks for having me, Matt.
Cameron, as we heard in the intro, you've been writing and thinking about housing affordability for some time. I just wanted to ask if you could give us some insights into the housing affordability area. And I think what I mean here is from an academic standpoint. What fields are involved and what do academics who are involved in this area typically study? And perhaps leading on to how you would say that that's informed your own work.
Yeah, so I'm a bit unique, I think, in the way I'm a classically trained economist. So I actually come from a different background to most people. The housing affordability as a social concern is actually very popular with planners and policy people and social scientists who worry about things like homelessness and income inequality and those social issues. So it's a bit of a broad church, and I'm a bit of an outsider with my very strict economics hat, although I do have a background in property valuation and development. And in many ways, that's quite interesting because obviously brand new property projects are generally the most expensive housing in a particular area. But I think it's worth understanding from my perspective the economics of the market as a whole, not just the small section of the market where people are really struggling or having issues with homelessness. So it's a bit of a broader field, and obviously I'm not a specialist in what causes homelessness or particular social issues around that, but I am an expert in the economics of the market as a whole. So yeah, it's interesting for me to also learn from these other specialists in other fields.
And so if we look at those other fields, you mentioned planning, policy making, social sciences. When it pertains to housing affordability, what are the kinds of studies that those areas are usually doing?
Yeah, so they're not my area in particular. A lot of it is in homelessness. There's a lot of trials of different types of interventions to see what sort of works and what doesn't, or comparisons between cities of different attempts at interventions. And that's a very fruitful way to do it is to actually test different policy changes and see what works and what doesn't. In planning, there's a lot of, I think, inferred analysis of housing affordability, but rather there's a lot of sort of discussion of preferences of what types of dwellings people want and what the market's delivering and why it's not delivering some kind of missing middle housing or something that could be more affordable. So that's sort of the approach of planners is looking at different preferences and how can we change the system to allow a more diverse range of projects in housing. And if we can offer a diverse range of projects, then hopefully everybody can be satisfied in terms of having somewhere that's affordable for them. So that's their approach. And I guess the economic approach differs in that looking at the system of housing for a whole, my focus is on, well, what's the economic incentive to supply new housing? Where are the economic conflicts between landlords who want the highest price and the highest rent, and tenants and prospective buyers who want the lowest price and the lowest rent, and how those conflicts get resolved through interactions in the market. So that's I guess where I differ and the other approaches.
Thanks, Cameron. That's really helpful. Allow me to go on a little bit of a rant as a setup to the next part that I'd like to discuss with you, Cameron. Obviously, if you read the news, it seems that there's a universal kind of reporting out there at the moment around affordability, particularly not just in Australia where we are recording right now, but also internationally. So I would just filter out a few of the main lines of that public discourse. Number one would be we are in or emerging from a building boom. Number two, we would probably agree, at least in Australia, that the property market has been on a high. Maybe it's over, but it certainly has been on a high for the last 2 years since during and after COVID. Number three, supply chains and the labour market are constrained, which means we can't build fast enough at the moment. Number four, another line here is that inflation is at a 30 or so year high. And finally, of course, to tamp that high inflation, central banks around the world are increasing interest rates at speeds that we haven't seen for quite some time. So all of these things get rolled together, making this a kind of perfect housing unaffordability storm. So Cameron, this is where it comes back to you. At a recent event that we held here in Brisbane, we listed all of these issues, and effectively you put your hand up and checked us on a few of those things. I'd really like to go deeper now into some of the myths that you think pervade housing affordability discussions and how you frame those issues.
Yeah, so that was a really interesting sort of overview of the situation we are in economically. The inflation, the construction boom, all of that. The way I look at it, there's sort of two big picture ideas in the back of my mind. And the first big picture thing is, if you look historically, there's always some kind of problem, right? It's very hard to say, oh, there's a perfect world, and if we got there, everyone would be happy. Even if the market was very flat, people would be unhappy and say, oh, the prices are flat, and so, there's no incentive for developers, and we're not developing fast enough, or something like that, right? There would be a reason for an excuse, no matter what the situation, or a reason to think there's some kind of crisis. So that's the first sort of lens, this long-term, every era has its own issues. The other sort of lens is that the property market is essentially, it boils down to one economic problem. And that economic problem is there's one group of people who own property, and there's one group of people who don't own property. And the people who own property economically benefit when the price goes up, and the people who don't own property economically benefit when the price goes down, until such time as they buy property, and then they want the price to go up. So if prices are rising very fast, we can say it's a crisis for renters. If prices are falling very fast, we'll say it's a crisis for homeowners, going into negative equity. So there's no winning. And so that's sort of the big picture framing that I like to keep in mind when someone says housing's in a crisis. I'm like, you ask anyone who owned a home, and of course, more than 66% of households do own their home, if the last 12 months where prices increased 20% was a crisis for them and interest rates were at record lows, and despite the construction capacity constraints and all that, that group of people, the majority of households, would say, what crisis? This is the best situation it's ever been for me regarding housing, ever. In recorded history, I've just made the most free money for the least amount of interest cost that I'm ever going to see in my lifetime again. So the trick here is from whose perspective, because it is in many ways a zero-sum game. And although economists, very much don't like to talk about zero-sum games, they like to talk about growth and investment and how there's win-wins, and and these are great insights. At the end of the day, cheap houses are good for those who don't own property, and expensive houses are good for those who do. And that's the sort of heart of the social conflict.
So permanent crisis, Cameron, permanent crisis. This is an interesting concept.
Well, yeah, exactly. So let me then. So at this talk you hosted, Matt, at the CRC hosted a couple of weeks ago. That was actually my second. I sort of talked through five myths or stories that we get, and tried to sort of debunk them or contextualize them. And that's one of them. There's a crisis. Like, is there a crisis? Um, and we hear about the rental crisis, but if you take through my lens of a slightly longer term perspective, we can look at the rental price index in the CPI in Brisbane, for example, where we both live. And over 5 years, up until June this year, the average rental price paid for sitting tenants, or across the market as a whole on average, not just for new leases, only went up 5% in 5 years. And in fact, for the decade up until June this year, it only went up 12%. So actually, the price of renting has been a drag on consumer prices for the last decade. In Sydney, rents are only roughly where they were 5 years ago today. Despite them having risen at a record pace, they actually fell for 3 years from 2017 to 2020, and they've just recovered that fall today. So, is there a crisis? Well, it's very hard to see that all of a sudden, um, renting in Sydney is more unaffordable today than it was in 2017, for example. So it's certainly the case that today we have a very, particular rental crisis, which is predominantly in regional towns, where during COVID, a lot of high income households relocated and then outbid all those locals for the best property in the town. And those locals had relatively cheap rent because they weren't bidding against a lot of high income households. And so that's definitely resulted in a lot of displacement in the last 18 months, especially in 2021 and earlier this year. And that's been a global pattern as well. So, that's the story. Rents are relatively cheap compared to 5 years ago, even though they're rising quickly. But the big crisis is actually this sort of niche new pattern that we've seen because of COVID. So that's sort of how I'd characterize today's. And so it's weird to me to see media reporting of Sydney rental crisis, and them showing suburbs where the median rent is exactly the same as it was 5 years ago. There was actually a story on Four Corners late last year talking about this, and I was interviewed for that TV show, the ABC, current affairs show. And they took this example of a Sydney suburb where, oh, look at the prices, they've gone up. Isn't this tragic? And I just went to the internet, to all the data sources on property, and looked, and I'm like, well, prices there are still below their 2017 peak. Like, this is, and I told you, I told the journalist, hey, look, prices are just recovering. They've actually fallen a lot lately. I also told them that first home buying was at record highs. And the journalist said to me, oh, well, maybe we won't say that. It doesn't really fit with the story, because they wanted to imply that home ownership was increasingly out of reach. And yet we had record first home buying at exactly the time they chose to ignore that information. So anyway, so So I went through 5 myths at this presentation, and one of them was there is a crisis. And if we look long term, we kind of see, well, property markets are kind of just doing what they always did, and renters are, yeah, some are being displaced in certain places, but only because rents have been falling for a period and now are rising and people are readjusting. And I guess that I've already flagged the second myth that I talked about, which is that a lot of the press reporting these days is about home ownership increasingly being out of reach. And I think I'm not sure if you mentioned that, but it's a story that's happening globally. When prices rise, everyone um, likes to say how hard that is. But in fact, first home buying in the financial year 2021, we had about 170,000 first home buying households that year, and the average for the 5 years prior was about 85,000. So we're looking at double. We had double the number of people buying their first home in the 2021 financial year at exactly the time when the media was reporting how out of reach home buying was. And what's really interesting is we could have known this because the data comes through about mortgage lending to first home buyers. The ABS has another survey on household, and all that partial data was suggesting that investors were selling, landlords were selling after the 2017 Royal Commission, and first home buyers were buying. And that's how you get higher home ownership. In like landlords sell to renters, and then you get one less rental home and one more owner-occupied home. And I predicted an increase in home ownership a year before the data came out, and everyone thought I was crazy. But the information was just sitting there on the ABS website. And then when it did happen, I obviously reminded everyone on social media, hey, here's this crazy guy who a year ago predicted this. And so from 2016, we had 65.4% home ownership, and 2021 in the census data, we had 66.0. So an extra 0.6%, which is about 60,000 households above what you'd expect. Yeah.
So, Cameron, I just want to intervene there for a second because this feels like a theme, which is on at least in the first two myths that we're talking about here, they're the popular opinion, right? Or at least what we might conceive of as popular opinion as moderated through journalism and the press. We are myth one, we are in a crisis. Myth two, sorry, home ownership is out of reach. As you've learned from your personal experience, you had some messages there that one of the finest and most long-standing independent journalists and investigative reporting television shows in Australia, Four Corners, I clearly didn't want to hear. What's behind this let's call it lack of interest in the facts?
Yeah, you got me, Matt. I think, to be honest, a lot of it is just if it bleeds, it leads. A lot of it is just you gotta tell us there's no story there if you go, oh, things are fine. Like this is normal. There's no story for the press. So that if you can come up with a new and creative way of saying why things are bad, then you'll get covered. Like, oh, have you realized that, oh, actually this thing you've never thought of is bad for climate change? Well, yeah, okay. Maybe it is, maybe it's a real stretch, but if it bleeds, it leads. If your finding was this obscure thing, is pretty much fine, maybe we could, reduce waste or, improve efficiency here. Like it's very hard to get anything reported. So the mundane bits of progress that we make in the economy every year, just they're not newsworthy. And it's kind of sad in a way, but I think the news is always like that, right? The whole man bites dog, right? The more I've been involved in the mainstream media, the more I find, they just like telling stories people want to hear. They're very captured by the audience, and facts are incidental in many ways.
Look, I didn't want to distract us into a broad brush analysis of contemporary media, but I did think that's an interesting sub theme in those first two myths. Maybe back to myth number three.
Yeah, okay. Well, look, I'd be interested in maybe your opinion later on that, Matt, as well. If your impression of the press when we wrap up. So is there a crisis? Well, it's hard to see anything significant in the data aside from in regional areas, the displacement of locals and a rise in rents from people relocating. So that's one. Number two, home ownership is increasingly out of reach, and yet home ownership is, higher than it's been at any point in the last decade. The next myth is a little bit of a weird one. There is this sort of inferred idea that cheap housing is a political winner, that somehow um, politicians want cheap housing. They'd love to try and create a policy that made houses cheaper. But it's just one of those wicked problems, right? And that's just not the case. John Howard, if you recall a famous quip, he said, "I've never met anyone on the street who complained that their house was going up in value." And of course, with 2/3 of the country being homeowners, 18% of households being landlords, and those obviously are skewed much to the top of the income and wealth distribution. There's a huge incentive to keep rents up for those landlords and prices up for those homeowners, because it's essentially free money for them from future buyers and tenants. And if we look at home buyers, we have 90,000 households on average a year, except for 2021, where we had double that, who are become first home buyers. So that's a percent or so, 1% or so of households who become buyers. They want prices to be low, but only until such time as they become homeowners, at which point they want prices to go up again. So the electoral calculus is heavily on the side of satisfying the majority who are homeowners and want prices to go up. And it's sort of obvious in a way, because Australia's housing stock is worth about $10 trillion. So that's 10 million, which is almost $1 million per household, on average across the country. And so you can imagine if you really did engineer prices and rents to fall 30%, you're wiping out $3 trillion of value from the balance sheets of these households. You're also, total rents paid by tenants are about 50 billion a year. You're also wiping a third, 13 or 16 billion a year, sorry, of income from these top 18% of households who happen to be landlords as well. And so, I just don't see any incentive. So I guess my point here is that politicians who talk about it and the media who takes them seriously about, oh, we're going to do this, we're going to make houses cheaper with this policy, they are lying, essentially, because they know that if it really made houses cheaper, they'd be gone in a flash, just like we saw in was it the 2017 election, where Labor actually promised to just close a few little tax quirks in negative gearing and capital gains tax, a few minor tax changes that might be worth a few billion here or there each year, from the pockets of landlords, and they lost the election predominantly because of that. So I think we've got to face the facts here that directly intervening to make people's houses worth less money is just bad politics. And when we hear about it, we should hold them to account. And it's funny because the local councillor where I live is a Greens councillor, and he asked the Lord Mayor in council chambers where it's recorded and transcribed. He's like, "Do you want to see house prices go up or down? Which one?" And he just kept pushing and pushing. Say it. Which one? What do you want prices to do? Go up or go down? And of course, being a seasoned politician, the Lord Mayor said, "I want, affordable housing options for everyone in the city." But because, of course, that's the heart of the dilemma.
Yes, I know. We see that. And I think maybe picking up on a theme there is that I feel has probably come through the final two myths is facing the facts. Um, I think the cleansing light of the data and the facts that you're presenting here is, and also the central paradox that you've come back to already in the first three myths between owners and non-owners, and the zero sum gameness of this, and the absence of that very clear insight in public debate is something that that debate would definitely profit from. So I think there's real value there. Okay, myth number four, Cameron. Where are we?
Yeah, okay. So myth four, and this is something I see a lot. And it's funny because every country does it. They say the housing crisis we have, however they're defining the housing crisis, is due to some boutique local political factor. Um, the crisis, however we define it, whether it's prices going up too fast, down too fast, whatever, um, the big game is to blame local political factors. Oh, councils didn't rezone. Oh, it's our tax settings. Oh, it's this. Oh, this politician didn't deliver. So we use the housing market as a sort of political whip to whip our enemies with, ignoring the fact that in every other city in the world that's facing exactly the same problems at the same time is doing the same thing and blaming their local council for doing a different rule and getting the same result that we got because that policy or rule was completely irrelevant because they did the opposite to what we did. We both had the same outcome. It doesn't matter for politics. So let me give you an example, of how that goes. You can look across cities today, and everyone's having the same discussion we're having. I've got a lot of people in California who follow my research who are asking me the same things. They're like, "What about this? What about this?" I'm like, "Well, ignore it. We don't have any of those policies, and we've got exactly the same issues you have. Like, it's very tangential to the problem at hand here, and yet they're searching for some kind of local uh, rule. And if only we'd upzone this, that will save the day." So that's the myth that it's due to local factors, but you can also sort of see that across locations and also across time. Like it's because of a modern factor, but it's really not. And I love this quote from Charles Darwin, the biologist, when he first visited Sydney in 1832. So we're talking, 190 years ago in Sydney. The first paragraph of his diary, he writes on from his first day in Sydney. I'll quote: "The number of large houses just finished and others building is truly surprising. Nevertheless, everyone complains about the high rents and difficulty in procuring a house." Unquote. So, we're talking about, oh, it's capital gains tax, it's negative gearing, it's zoning, it's this. I'm like, none of this existed 190 years ago. It's implausible to argue there's some kind of shortage of land or some kind of financialization. It's just literally people who own property like to charge a high price, and people who don't have to pay. And Charles Darwin saw it. And, Karl Marx in the 1870s basically made the same argument about Europe. Prior to the Second World War and the Great Depression in Australia, it was a huge issue that there was overcrowding in Sydney. Landlords were extorting tenants. Working class in society couldn't buy housing, and in fact, in that period, home ownership was estimated to be below 40%, whereas today it's 66%. And we also can look to the future, and I like this quote from Lars Doucet, who's a computer game designer whose expertise happens to be real estate in computer worlds. And let me quote him. "Digital real estate is not actually a new phenomenon, and history consistently shows that when digital land sufficiently resembles the economic properties of physical land, we see digital land speculation, digital housing crises, and even full-blown digital recessions." So, I don't know what local council policy, people are blaming for the fact that when you replicate the housing market in a computer game, uh, you get the same outcome.
So not only permanent crisis on Earth, but permanent crisis in the metaverse as well, Cameron? Is
Yeah,
this what we have
I,
to look forward
no,
to?
that's no, exactly right, exactly right. So if we replicate the system of property that we have on land in a computer environment, and we have a class of people who own it and a class of people who don't and need to pay them for access, then I think that's exactly the lesson there.
Yeah.
Yeah, it's so those who want to blame local factors, and obviously this goes back to the comment you had before about the press, what's their interest in ignoring the facts? Well, it's because it helps sell a sort of sexy story about a local political intrigue, right?
Mm,
Um, Whereas if you just said, oh, this has been the case forever, it's the case in lots of cities, you actually have to ask some deeper questions about, oh, isn't it weird that there's one group of people that benefits and one doesn't? We have this distributional economic conflict at the heart here that
yeah.
it's almost taboo right now to talk about.
Yes. Yeah.
Mm.
I agree. So local factors not so much of a determinant in various housing crises. Myth 5, Cameron.
The myth five is also related in some ways, and hopefully I'll remember to come back. Myth five is essentially that the property market, if left to own its own devices, will operate in a way that wipes trillions from its own value. So this is also known as the supply myth. The supply myth is very popular because it avoids these tough questions, and it essentially says um, it's related to myth four about local factors that if governments would get out of the way, there's too many regulations on building homes. If they'd get out of the way, all the property owners who could build new homes would panic and build housing as fast as they physically could until such time as prices had fallen sufficiently, say 30%, 40%, whatever it is. And the reason, and related to this is, the reason housing's expensive is because we haven't been building enough. That is, there's a shortage. Somehow there aren't many houses around. Now, there's a difference between how many buildings are around and how many landlords are advertising to tenants at a set price at a set period of time. Those are different, right? It's just like how full is the dam and how open are the gates on the dam, the floodgates, right? They're different. You can have a full dam and close the floodgates. You can have an empty dam and open them. And we've got a stock flow sort of confusion because today there are more, bigger, better dwellings per capita in Australia than at any point in history. So we have the fewest number of people living in the biggest dwellings of the highest quality than ever before. I just don't see how that is somehow underbuilding or somehow a shortage that is somehow causing high prices. In fact, you know, we during COVID, we had record low occupancy just before the financial crisis of 2008. And the same conversations. Oh, it's a supply shortage, but we had record low number of people per dwelling and record high number of dwellings. And that actually reversed after the financial crisis when rents and prices fell. So it's a weird thing. So it's interesting because also, that argument was sort of admitted to in the Falinsky inquiry. So this was a parliamentary inquiry held earlier this year into housing supply and affordability run by Jason Falinsky. I think he lost the election, former MP. And I said to him, he was very good. I said, look, you keep talking about this supply myth that developers want to flood the market and decrease prices. Can you please ask some developers to come in and ask them, if I rezone a lot of land like you're proposing, how much will prices fall? Tell me the number under O. So he ended up, he's a politician, but he's a good guy there. And he got them in and he put them under oath and he asked them, if we upzone the country, will prices fall 20%, like you argue, or like I've heard? And they all said no. One after another, they said, "Oh, that's implausible. That would never happen. That's not going to happen." He goes, "Okay, that's your answer. Next person. What's yours?" "Oh, I agree with them. That's just never going to happen." "Okay, next person." Of course, prices had just risen 45% in Brisbane, 20-something% in Sydney and Melbourne, and they're arguing that if you upzone the whole country, you couldn't reverse, 6 or 12 months worth of price gains ever. And so they all weaseled out at the end and said, "Oh, no, 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 maybe prices wouldn't grow as fast some point in the future, in the unknowable future," right? So and it obviously makes sense. And another part of this, related part of this, is that we there's a story now that build to rent housing. So having corporate landlords build whole apartment buildings or subdivisions and retain ownership and rent the whole project. So currently in Australia, new buildings, apartment buildings, are like what they call condominium style in America, where you sell each individual apartment to a different owner and they can rent it themselves or occupy it. And so build to rent is about having these large scale landlords that own the whole building and manage it. And that's being talked about today as a part of the solution to the crisis, this undefined crisis that we have.
It would probably help, wouldn't it, Cameron, to if we are interested in solving the crisis, to define the crisis. I think that's a really interesting point as well. Sorry, I interrupted. Carry on. Yeah.
There's two funny things about that. One is that the people pushing build to rent are large scale property developers who own large land banks of undeveloped land, who want tax breaks, so that it's more beneficial for them to own the property and sell it. So the first puzzle is this: if there's a shortage of places to build houses, how do they have all these spare sites to do this unprofitable build to rent when there's just so many buyers and not enough land that they shouldn't have any spare sites to do these build to rent projects, right? So they're essentially admitting we've got heaps of land and lots of stuff we want to do, but we need some kind of tax break to actually do it. Otherwise, we'll wait. So they're almost admitting that. The second thing is that when these projects have actually got off the ground, there's no incentive to build to rent and rent cheaper than the market, right? Like, because already when you build to sell, the owners are most predominantly landlords, private landlords, and they don't have an incentive to sell cheap, well, to rent cheaply. So why would a professional, money manager or corporate landlord have some kind of incentive to do it? Or even to offer more secure leases, which is, I think, the only reasonable argument. They'll go, "Well, a corporate landlord's not going to sell, so you won't have to be forced to move if the landlord sells." But why would they offer that? Isn't it also beneficial for them to offer rolling 12-month leases and then kick out people who won't pay the higher market price? Now, let me give you an example. So in Sydney, Mirvac, one of Australia's biggest apartment developers, they did a build to rent project, and now they brag on their website and to their investors about how they're getting a 20% rental premium, because what they've done is, instead of making houses cheaper, they've packaged in like premium gym service, concierge service, and all this sort of stuff they can also make a markup on into the package, and they've rented to the very richest inner city professionals. And I'm like, well, how is this? What problem is this solving exactly? You've just created the most luxury rental thing that you say is 20% above the average rent for a similar apartment in your suburb. What is this the solution to exactly?
Exactly, and it's a very good point that you raised, Cameron, because it is, and from the work of some of your colleagues at the University of Sydney, where I myself once worked, I was aware of this supply myth as well, and it is perhaps the most common story that comes from the political side into the mass media, which is that we need more housing to solve it. And looking at it from a building side, I remember thinking back in those days that a really easy way to summarize this is that builders and developers only build and develop when it's profitable to do so. They do not build and develop when it is not profitable to do so. And that is the mandate of any of those companies. And if we didn't wish it thus, then that would require some very deep introspection. And so it strikes me that everyone's doing this dance, and it's not just the politicians, it's not just the media, and it's not just the developers, but everyone has a similar, let's say, position in this dance that is actually not just a fundamental acknowledgement of the underlying facts of the system that we're in and the problems that that system is throwing up for
You're
us.
totally right. I think it's just the economic conflict between owners and non-owners is just too big and scary of an issue. Um, there's this, I'm going to forget, there's a classic saying, if you live right in a dangerous area, where there's cyclones, you never think about those major dangers because it's just too big and it's unavoidable. And you think about little things instead. There's a classic quip about that. But yeah, I agree that that's the case. And I think, there's also a little bit of a, what would we call it? Research industrial complex where we don't really want solutions because then we've got nothing to no one's going to fund our research on housing markets again if we fix the core issue. Um, there's I think there's a little bit of this because, I can tell you, I get offered a lot of consulting work. Oh, we need another review on this. We need another review on that. We need this. I'm just like, well, I can charge you to write a similar report. But if you look at, for example, parliamentary inquiries or government major reports, I've got a list here in front of me of about 20 in the last 15 years. Nearly every year, there's a major inquiry into home ownership, housing supply, affordability, whatever it is.
I mean, it's great that you've got the list. I would actually strongly suggest if possible, we create a link to that list of your reports.
Yeah, I will. It was in my submission to Felinsky. I said, you're really doing another inquiry? This is like an annual, ritual now of doing the same inquiry.
So, look, Cameron, we've covered the five myths now, and your last comment, I think, is around the research industrial complex, which might just get you and I as academics offside with the rest of our colleagues. But just holding that for a second, I would say if we move the discussion, I guess, from an analysis of the myths and the problems, I'd say that, as academics and commentators, the charge that could be made against us is that we're really good at problem identification, but perhaps we're less good on the solutions front. I wanted to ask you if you've seen some promising solutions, or at least some work towards them, or is there one of those reports or one of those committees you've referenced the Felinsky committee recently that is actually making progress in this area?
The short answer is I asked myself that question about a year ago when this discussion sort of hit fever pitch and that inquiry, the Felinsky inquiry was going, that Four Corners came out. And I just thought, hey, hang on, guys. We are just falling into the trap of looking for local factors, not identifying the economic conflict. And so I ended up sort of doing what I think we should do and saying, hey, if we look around the world, what's the housing system that people objectively complain about the least? Let's put it that way, because let's be clear, not everyone complains, right? Like, you can build a new public park for people and go, and this is the greatest thing ever, and they'll complain about it. Oh, it should have had this, we should have done that. I'm like, compare this to the situation you just had, or you build a new hospital, or you create a public health system like the public hospital system, which was a huge debate in the 70s of, oh, that's impossible, that's communism, this and that. And now, if you compare to health systems abroad, I don't think you'd trade a lot of the public hospitals in Australia for anything. Like the system is very good compared to its peers, even though we still complain about it. So my approach is, well, what's if we look around the world, if we were in the United States having a discussion about healthcare policy and the inequalities and the conflict between, service providers and charging high prices in healthcare and getting cheap um, healthcare for residents, we would look around the world at systems that, yeah, people still complain about, but objectively a lot less, and there's clearly huge benefits. And we'd look at Australia, we'd look at the Central European countries, and we'd go, okay, these are systems we could borrow. And so that's what I figured needed to be done for housing. And the standout global benchmark there is actually Singapore. So I said, okay, Singapore went from 20% home ownership in the 1960s to nearly 90% today, right? Whereas Australia peaked its home ownership at 72% at the end of the 1960s, and it's sort of bounced around, but it's now 66% today. What on earth are they doing? And what they're doing is they're addressing this core conflict that non-property owners have to pay property owners. And so they say, hey, why don't we just create for non-property owners an outside option that is not private provision of rental housing and let them buy from this public provider. Just like in hospital systems, if health insurance and private care was too expensive, we go, hey, here's a public option at a cheaper price. And you can choose the private one or you can choose the public one. And it gives you that option. And we could do the same in housing, which is what Singapore does. And so I wrote a report basically proposing that we rip off, copy, all the best economic elements of Singapore's system in what I call housemate, the conjoined policy word, which would be a public home ownership provider. And it would essentially operate like a major property developer doing apartments, townhouses, and land subdivisions. And if you were an Australian citizen who didn't own a home, you would have the option to buy from Housemate at a massively discounted price a new home. So in Singapore, for example, if you're a resident, you can buy a brand new 4-bedroom apartment for $300,000, where in the private market, that same thing in a condominium development might cost $1 million. And you can use your compulsory savings to pay a deposit and repay the mortgage. And so it actually is the case that for most young Singaporeans, they buy their first home and there are no out-of-pocket expenses because their compulsory savings covers the whole mortgage and deposit. And that's essentially the system they have. And so advantageous is that system compared to the private market that the Housing Development Board, which is the public housing developer, has actually grown to become by far the largest builder and developer in the country. It does sort of nearly 90% of new housing simply because that public option is very good. Now in Australia, because we already have 66% home ownership, we can create a much smaller scale option. And remember, there's only 100,000 or less new first home buying households a year. And we could offer all of these people a discounted property. And they could choose to buy in the private market because there's a much more diverse range of things, or they could choose Housemate, and it would save them, by my estimates, 50 to 75% of the out-of-pocket cost for a comparable dwelling, and sometimes more, and you would have that ownership for life.
That's really interesting, Cameron. So obviously, I'm not trying to feign ignorance here because I first came across your advocacy for Housemate in the press. It was released a couple of months ago, I believe, and I read about it and investigated it, and so it became one of my sub-agendas for a recent tour that I undertook to Singapore to check this out. And I can independently confirm for our listeners that it is not only a system that is alive and well, but it's actually flourishing over there. And in actual fact, what I learned from my recent trip to Singapore is that the difference between you hinted just before at some differences between private market and the public market housing, that the differences between those two markets is shrinking. In fact, what began in the 60s and 70s as relatively modest housing options has become something much closer to the kind of private condominium style housing that we expect in other countries. And I think that is a really interesting thing as well. And the other point that I would just make, Cameron, that might be of interest to you and our listeners is the source of national pride that is palpable in Singapore for this system. And this national narrative of taking what was in the 1950s, and I heard this many times in many of the meetings I had with government agencies and private companies, was going from having the world's densest slum in the 1950s to almost complete lack of homelessness. So this has really become a source of national pride. And I thought it was really interesting. But the question that I'd like to put to you now is how would housemate and this concept of a let's call it a moderated Singaporean model adapted to Australian conditions avoid the issue of taking money off the table for those agencies and businesses that are currently, have their fingers in that $10 trillion housing stock pot that you mentioned before?
So it won't, unfortunately. There's a political sales pitch required for any of this, because housemate, at the end of the day, is giving non-property owners, renters and prospective buyers, the option to get a heavy subsidy, right? So that they don't have to pay the property owner the full market price. And at the end of the day, that subsidy is real, and I calculate it to be, I have to double check my numbers, but it's not particularly much. It's about $50,000 per dwelling, because you're not, you're sort of taking on the risk. You've got low financing costs, and you've got some economies of scale. So you're offering all these people a subsidy. What you're not doing is you're not directly manipulating the price of private dwellings through changing tax settings or whatever the case may be. So I think politically it sells because you go, hey, you guys in the private market, you do what you do. We are comfortable with how you're operating. You private developers, off you go now. We're just doing this little side project where people can come and buy from us as well. You tell me you're competitive, I'm going to compete with you. The trick, of course, is that the price effect is indirect. So there's two effects. One is you get the housemate dwelling, you save a heap of money over your lifetime, that you're not paying a landlord and you're not paying the seller of the home, because the seller of the home is giving you a below market price deal. We're sort of collectively subsidizing this. So that's one effect. The other effect is this indirect pricing effect, whereby because every citizen non-homeowner, it's not like foreign buyers come in and buy them. You have to be a citizen non-homeowner. You have to qualify. And the effect is to draw potential buyers out of the private market and to give renters a cheap alternative option, which means that when a renter is saying, should I pay this much to move to this town to work, they can compare that not just with buying and renting in the private market, and they now have a third option, which is buying from housemate at a discounted price. And even if they decide to rent, they won't pay as much because of the relativity, right? So it's that's what competition is, right? When you get a new competitor at a discounted price, fewer people will pay that higher price for the other product. So you've now got this competitor for all the renters and buyers. The willingness to pay in the rental market will decline. So there's this indirect effect on the balance sheets of property owners that I think you could politically navigate by emphasizing that you're not directly manipulating their property price. You're just offering an alternative and saying, hey, if there's an effect because of competition, you guys can compete with us. drop your price, offer something we can't do. I mean, we're just a cumbersome public agency building houses after all. If you can't beat the lazy bureaucracy, maybe we shouldn't believe other things you say about your competency or your analysis. So,
Having read this in great detail, you do cover off a lot of the contingencies that are likely to come up. I can just feel in our audience now there would be people out there who've studied this area or perhaps are involved in the industry, and they might be going, yeah, but what if, and what if this and that, and how does that not stimulate speculation in the economy? I want to reassure the audience that the view that Cameron's just given us now is obviously an abbreviated version of housemate, but there's quite a bit of data on Cameron's website that we'll obviously post into the show notes here, that you can go down into the very fine print and details of what's being proposed here that we obviously won't get a chance to cover off in today's call. So I would say again, Cameron, having read your proposal, having heard you talk about it, and now having had the chance in the interim to go to Singapore, I really do think that what you're proposing here is certainly a viable option. And I think, speaking very frankly about some of the things we've spoken about today, and a kind of facing of the facts, this hand wringing and indeed in some cases pearl clutching that goes on around the housing affordability issue in public debates can be put to the side by actually, you doing what most academics traditionally don't do, and that is actually putting a viable solution on the table. So I congratulate you for that, and I would direct the audience to go and have a look at Housemate. And next time, perhaps you're reading a press story or some of these debates that are going on, actually think about this concretely and say, well, there is actually a viable solution. There just needs to be the will to do it. So thank you for that, Cameron. I think that is really good. I think I'd like to move to wrap up the conversation now, and I've got a couple of closing questions for you, because it's one thing to do great analysis like you've done. It's another thing to put a solution on the table and put your, walk the walk, I suppose we could say. And then there's another thing, which is trying to look into the crystal ball that is the future, which I believe your training as an economist would give you some license to do. Firstly, I want to ask, are things going to improve, or are they going to get worse?
well, let me go back to the first myth of, is there a crisis? I have predicted that we will have we will change our crisis. We will move from the rental crisis to the house prices are falling crisis in 2023. That's what I think. If you look in the US, which is, it's nice to have an economy that's a little bit forward in time to ours. And if you look in the US, you'll find that they had all the same rental issues, but what's actually happened in the last couple of months is rents have started falling in a lot of areas. In fact, the most recent data by the agencies that look at advertising, advertised rentals, had rents falling in something like over 80% of the cities that they monitor in October. So I suspect that we will follow. So prices will continue falling. Rents will surprisingly peak in certain areas. And all of a sudden that will be the crisis, the home buyers with negative equity. What do we do about them? Yeah, so I think we will, like we do in property markets, we'll move from one crisis to the next crisis, which is the exact opposite of the previous one.
Okay, I think that's a really good prediction. My second wrap-up question is really, again, I guess we've spoken about analysis of the problem, putting forward a solution, and then looking to a prognosis of what might happen. You've mentioned that there is political will required, for example, to adopt a housemate process. What other conditions do you think are required in order for us to see some change in this space?
Yeah, look, I'm really not sure. I do think that you need a crisis to create change, like a genuine one, not just a run-of-the-mill. There's always a crisis in housing, and I think it needs to affect, the families of important people, right? That the working class has running out of money. Like, no one cares. Nothing's going to change. They still have to vote, for essentially the two parties. But when these landlords and when these well-connected people get into trouble, I think that's a crisis, and that might change. And yeah, I really don't know. I mean, my expectation is that nothing's going to change, and it'll be another 20 years of the same complaints, the same cycling through different different changes in the market being a new type of crisis. And look, I think we've got to be wary also of like half solutions. So one of the critiques of Housemate is that isn't this the same as Kiwi Build, the New Zealand public housing construction program? And and I think the difference here is that, like Australia today, New Zealand doesn't want prices to come down, and they don't want a public competitor to be successful. So they essentially said, we're going to not subsidize this. We're just going to build worse, smaller dwellings in worse locations and make them cheaper, rather than actually, no, we have to resolve the central conflict here of offering potential buyers, non-property owners, and renters a discount on the market price, not just a worse property. So, there's a bit of a political reality to face up to there. And I find it interesting if we look, there's a book that came out recently on the politics of Medicare in the 1970s, and it goes through all this sort of political debate that happened about how it's impossible, how the free market can do this, and we were having exactly the same debates. Oh, this is a crisis in this. Oh, we have to rely on, voluntary community groups to supply health services. It took 15 years of a real heated debate to really cement in the minds of Australians that public hospital is a right, public healthcare, and that we should all chip in and do it. And there's very good benefits. We can improve on the market outcome by adding in this extra option. And I suspect it will take a 10 or 15 year protracted crisis of declining home ownership, that is affecting more well-connected and wealthy people, that leads to change. And unfortunately, I see mostly things plodding along as they are.
Okay. Who knew that economy didn't always have a happy ending? I know I did lie before when I said that I had two closing questions, because I can't resist the third one.
All right.
And that is, recently in the October budget, the Commonwealth Government of Australia announced its million homes policy. I would love to hear your commentary on that in light of many of the things we've spoken about today.
Yeah, well, I don't think there is a policy there. I think there's just a word, a political catchphrase, because my understanding is they're going to just take credit for the next million homes that will be built. And since we build a couple of 100,000 a year, then you know, in 5 or 6 years, we'll have built a million new homes, and whoever's in government can take credit for it, simply because that's how the market operates. And my understanding is the intention in terms of non-market price dwellings, this whole idea of giving people a non-market priced option. The ambition there is only 30,000 homes over a decade. And the way that they're getting there is another completely bizarre thing that has entered the debate, which is this idea of a social housing fund, which is we're not going to build houses for people and rent it to them at the price we think is fair, because that is the concern we have that the rents are not fair on low-income people or whoever. We're going to not do that. We're going to borrow $2 billion. And what we're going to do is we're going to buy BHP shares, Apple shares, and Treasury bonds. And the sellers of that will end up with $2 billion of cash, and we'll have those assets. And we'll just sit there and we'll wait and cross our fingers, and hopefully we make a margin on the returns of that fund, and we'll dribble out that money into constructing some dwellings over the next decade. So it's the greatest excuse to get a really, really big number in a headline, but actually not do anything. And I've written critiques of this. I'm like, if you have $2 billion to spend on BHP shares and listed assets and Apple shares and whatever else you buy, you have $2 billion to spend on real estate assets, as in build new houses for people. Like, this is just the greatest political deflection accounting trick that I have seen for quite a while. That we don't have any money for housing, but I've got a spare $2 billion here to buy non-housing assets. But the last thing I want is housing assets, even though I've argued many times that our public housing agencies, like we already have agencies that exist, and they build houses for people and they rent them below market price. And there's massive social benefits to this, right? And if you look at New South Wales, their public agency, the Land and Development Corporation, their balance sheet increased from $34 billion in 2012 to $54 billion in 2017 because the price of all those assets they own went up. So what they're doing is they're providing social housing for people day in, day out. And at the same time, the value of their balance sheet is growing. Like, the name for that would be a social housing fund. It's a thing where you put money to provide social housing and make a financial return through the capital gains. So that literally, if you take the words literally, is a social housing fund. You build social housing, you own them. It's different to housemate, because I said we should sell them, but I'm very supportive of all non-market or below market housing options. That's a genuine social housing fund. What we've done is we've said, I like those words, but I'm not going to have social housing in my fund. I'm going to have BHP shares and other assets, and I'm going to have anything but social housing. Even though if I had $2 billion, I could also make money by just giving it to the state public housing agencies. So it's the greatest trick. And I think that 1 million houses announcement is just the cherry on top of the greatest political deflection that we have seen for a while in terms of housing.
And on that note, Cameron, I have to say it should be clear to our readers that you're not a huge fan of the policy.
I just don't think there is a policy in there. Like, it's an immaterial. It's all show, no substance. So it's very hard to me to say I support a nothing policy. Yeah.
Yeah. No, look, and thank you for that, Cameron. Thank you for your time today. I've found it really instructive again to hear you talk about these issues and to go into the detail of them and to pull the statistics and the logic and the facing of the facts that we've done today. So thank you for that. I'd also just like to point out to the audience that, of course, all of the notes and references will be added online into the show notes, as will Cameron's contact details for those of you who'd like to reach out to him. He'll supply those details. Cameron, thank you. And to everyone else, thank you for listening.
Thanks very much for having me, Matt.
Pleasure.